Of course, we are lucky and grateful to have Jim Rogers, the CEO of Rogers Holding, with us live this morning. Jim, you caused a lot of stir here in the United Kingdom with your bearish calls in the latter part of January on the UK economy and the sterling. Again, oddly enough, sterling seems to have found a footing despite the underlying metrics. And again, I just wonder if this is a case of temporary respite for a further fall, or really whether you're seeing something further down the road that's even more troubling than you're seeing now.
Well, my comment about sterling was not meant for this month or even this quarter. My comment about sterling was the big picture of what's happening in the UK. And what I said was that the North Sea oil is drying up and that the City of London is drying up. And I don't see that the UK has any industries which can replace the loss of income from the North Sea and the City of London, and therefore sterling is a bad place to invest for the next several years. I hope that one of you maybe can tell me something that's going to replace the North Sea oil or the City of London for the UK, because it'll be a fantastic growth industry, whatever it is. So far, I don't know what it is, so I would not. I've sold all of my sterling. I wouldn't buy sterling for another 5, 10, 15 years, who knows when, and I don't see good things happening in the UK economy. By the way, the same is true of the U.S. economy, too. I'm not picking on the U.K.
Sure. Jim, to your point about the North Sea oil, I know that some economists at the Royal Bank of Scotland, they then subsequently pointed out that the UK has been running an oil deficit for 4 years and that the current situation shouldn't necessarily change that. Having said that as well, I just want to link into some more viewer questions and get your call on where oil is heading. What type of a price target do you see on oil for this year or for the next 5 years? And the same goes for gold.
Well, to the Royal Bank of Scotland's point, yes, but they're making my point. The oil decline has been going on for some time, and it's going to get worse. If the Royal Bank of Scotland thinks that the oil production is going to rise in the North Sea, then, you know, they should buy sterling. I think it's going to continue to decline, as it has been for some time. What's going to happen to oil this year? Again, you know I'm not a market timer or a trader. I know that the IEA recently came out with a study which showed that the world's oil reserves are declining at the rate of 6.7% a year, and that's after discoveries. So, Louisa, it doesn't take much. You can figure out in 15 years there's not going to be any oil at any price unless somebody finds a lot of oil very quickly. I bought more oil recently, more energy recently. Doesn't mean it won't go to 30 or 20, but I do know that the known reserves of oil are declining worldwide, including the North Sea, at a rapid rate. And as far as gold is concerned, I bought some more gold today. So who knows? If gold goes down, I'll buy more. If it goes up, I'll buy more. But a price forecast for this year, I wish I were that smart.
Neil. Chime in.
Yeah, no, I certainly share the views on oil. Clearly, the new oil is being found substantially higher. I mean, we would argue that finding oil in Canada is a waste of time because the energy required to turn it into oil is too high. So, you know, you need very, very high levels of oil.
Yeah.
I suppose, Jim, my issue with gold, and I'd be interested in your dynamics from another perspective, is people see it as a hedge against inflation, which may eventually turn up under my scenario in about 2011 or 2012 once we've worked our way through this debt deflation. Do you think people are too carried away by buying the inflation hedge now, or are you buying it to some extent to hedge yourself against the dollar as well?
Well, Neil, I'm buying gold just because I periodically buy gold, because I do expect it to be much higher over the next decade. You may be right that we're not going to have higher inflation until 2010 or 2012, for all I know. But I do know that we've never had in world history a period when every central bank and every government in the world is printing money as fast as they can. That has never happened. Throughout history, we know that when a local central bank, a domestic central bank, prints money, it always leads to higher prices. So I know we're going to have serious inflation down the road. When it happens, I don't know. So I periodically buy gold. I don't have any method to it. It's just when I think about it, I do it. By the way, if the IMF sells their gold, you know, and the IMF is dying to sell their gold to bail everybody out, then gold could go down a fair amount. But that would be the bottom for gold if the IMF does it. Now, I hope the IMF does sell their gold for two reasons. One, we would get a low price for gold, and two, then we could get rid of the IMF, because after they sell all their gold, nobody else is going to give them any more money, and then the IMF would have to dissolve somewhere down the road.